Ravi sells vegetable on a handcart in a busy town square. 10 years ago, every evening, he stood in line at the bank with a crumpled passbook, waiting for hours just to check his balance or deposit a few hundred rupees. No one explained the forms, no one had the time. Today, a customer buys onions, scans a QR code, and the money hits Ravi's account instantly. No middleman, no waiting. From standing in line to receiving real time payments on a smartphone, Ravi's journey mirrors India's financial evolution. But how did we go from manual ledgers and banking delays to seamless digital payments, Jan Dhan accounts, and financial inclusion at every level? This is a story we'll explore, rooted in real people, real reforms, and yes, your JAIIB syllabus from McMillan. Hey everyone, welcome to JAIIBCAIIB on Tips, where we are making JAIIB super easy for you. No more just mugging up exam questions, we help you truly understand every concept. So cracking the exam becomes a breeze. Let's simplify JAIIB together. So let's begin the journey of India's financial system. Let's start with the basic. What exactly is a financial system? Think of it like a pipeline. It connects people who have extra money, like savers and investors, to those who need money, who have extra money, to those who need money, like entrepreneurs, farmers, and businesses. Now, just like there are two types of roads, highways, and village lanes, we also have two types of financial system. Informal system, this includes family, friends, lalaji, and moneylenders. It's fast but unregulated and often unfair. And the second one is formal system. This is structured, regulated, and it includes banks, NBFCs, insurance companies, mutual funds, all monitored by authorities like the RBI, SEBI, and IRDAI. India's formal financial journey began in 1770 with the launch of Bank of Hindustan. Then came the Bombay Stock Exchange in 1875, Asia's first stock exchange. And finally, the biggest milestone, RBI was born in 1935, becoming the backbone of India's financial architecture. After independence in 1947, India dreamed big, but we had a problem. Only the rich had access to banks, the poor, the farmers, and small businesses were left behind. That's when the government decided to take control and reform the system. In 1962, deposit insurance was introduced to protect people's savings. Then in 1969, a major move. 14 major banks were nationalized overnight. In 1975, regional rural banks (RRBs) were created to bring credit to the rural economy, and in 1986, the Sensex was launched, giving us a way to measure our stock market. It was a time of expansion and inclusion, but honestly, the system was slow, heavily paper based, and not very efficient. By 1991, India was in crisis. Our foreign reserves were so low we could barely cover 3 weeks of imports. We had no choice. We had to pledge our gold to foreign banks. But that crisis became our turning point. Enter the era of liberalization, with Dr. Manmohan Singh leading the charge and recommendations from the Narsimhan Committee. Major reforms followed. The SLR and CRR were reduced to free up funds for banks. Private and foreign banks were allowed, bringing competition. Banks were told to maintain minimum capital, a concept called capital adequacy ratio. NPA classification norms were introduced, so banks could no longer hide bad loans. Liberalization was like throwing open the windows of a musty room. Suddenly, fresh air, new ideas, and global exposure flooded in. Now let's talk about our capital markets. In the old days, if you wanted to buy shares, you filled out paper forms and waited for days. Errors were common and frauds plenty. Then came the tech revolution. The NSE introduced screen based trading. No more shouting on the stock floor. NSD and CDSL allowed shares to be held in demat form. No more paper certificates. T+2 settlement means faster and more secure trades. And SEBI, India's market watchdog, kept brokers, companies, and investors in check. The space opened the doors of investing to the common man. In 2008, the global economy collapsed. Banks in the US went bankrupt and panic spread everywhere. But India, we remained relatively stable, and that's thanks to our cautious and well regulated system. The RBI acted quickly, India's rates were slashed, liquidity was injected into the banking system, support was extended to NBFCs and exporters. While the world was sinking, India was not only afloat, we were learning, adapting, and building stronger systems. Now comes the phase that affects all of us directly, the digital banking revolution. Even the most remote villages are now connected to the financial world. PM Jan Dhan Yojana brought millions into the formal banking fold with zero balance accounts. The JAM Trinity, Jan Dhan, Aadhaar, and mobile linked everything together. UPI turned your phone into a money machine. Payments banks and small finance banks made banking available in every corner of India. For the first time, banking became simple, fast, and inclusive. As we moved ahead, the focus shifted to strengthening and cleaning the system. The insolvency and bankruptcy courts helped banks recover bad loans faster. NARCL, or the bad bank, was set up to deal with toxic assets. The deposit insurance limit was raised from 1 lakh to 5 lakh, giving savers more security. The LIC IPO introduced transparency and accountability in public funds. These reforms made the system tougher, cleaner, and more resilient. Now let's take a quick look at today's landscape. There are 151 scheduled banks, 43 foreign banks, 42 RRBs, 11 small finance banks. Over 1.6 lakh branches are there. Over 1.6 lakh branches are there. There could be more than that, and more than 2.13 lakh ATMs are there. These data are based on totally McMillan book, so it could be more or less, right? So don't go on data. But India is now leading the world in real-time digital payments, and it all happened within one generation. This is not just a textbook chapter, it's our story. From Lalaji's notebook to mobile wallets, from banking for the elite to banking for every citizen, from crisis to confidence. So if this video helped you understand the Indian financial system better, hit that like button, subscribe, and check out the links below for full Macmillan based notes, quizzes, and mock test. Let's crack JAIIB not with stress but with stories and clarity. Join our Telegram group at the JAIIBonTips. You can download our app from Play Store and App Store. Both the links are available in the description, and you can start learning from our website too. So then, bye bye.